Alright guys, so in this video I'm going to talk about how to actually become good at forex trading. The purposes for becoming good at trading is actually for using other people's capital to make money, or using big capital to make money, trading for hedge funds, trading for private equity companies, becoming someone's CFO and improving their companies capitals and growth, anyway, like many things that you can do with it, or just maybe increasing on personal capital, which is also a good thing to learn. So how do you do that? So let's look at it in a few ways. The first way that I want you to look at forex trading when you're doing anything in your strategy making or whatever, right? Or anything that you do in your forex trading, you need to look at it in two ways, a very binary way. Everything that you do in your trading, you have to look at it as whether is this action gonna make you money, or is this action gonna make you loss? Okay, or let's put it into more details. Is this action gonna help me reduce the risk or not, or is this action gonna help me increase the profitability rate or not? What I like to call it is, I like to put it in this way. I call it risk to reward ratio. So when you whatever you do in your forex trading, you look at whatever strategy that you see and whatever that you do, do whatever it takes to decrease the risk, whatever it takes. I'll say it one more time: whatever it takes to decrease the risk. Okay, and do whatever it takes to increase the reward. All right, but the risk decreasing comes first before reward. A lot of you people like to focus on making rewards first, but once you try managing big capital for yourself or other people, you'll realize that risk management is by far more important than focusing just on growing your capital. So what can you do to reduce risk? There are many things that you can do, so I'll list a few of them out of my thoughts just like that. I haven't even put down a list in front of me. The first thing is, if you are doing day trading, right, doing scalping, whatever, try to avoid low risk reward ratio as much as possible. Low risk to reward ratio strategies, try to avoid them as much as possible. The second thing is, try to avoid trading before and after the news. Try to avoid trading while the news are happening. Trade before, 1 hour before, 1 hour after the news. Okay, don't trade it between them. The other things that you can do is that to reduce risk, try to use strategies that have more indicators, or more other strategies are combined in it. Like, don't use one indicator alone. Try to use few confirmations at least, and do backtest the strategy. Okay, backtest it for at least a year. Backtest, what if I'm trading this last year or January 1st, how the trade looks like. Go through that for a whole 1 year, go through that and see whether it works or not. If it works on back testing, then try to systematically write it down and test it on forward testings. For testing means like, oh, you're trying to test it on a demo account for 1 week or so, or at least for a half month or 1 month, and see if it's profitable. And once you see it's profitable, see what else can you do to reduce the risk and increase the reward. Okay, there are a few strategies that you can use to reduce the risk. The first one is that, of course, do not use brokers that it takes a lot of commissions on each trade out of you. Do not use those. Okay, you can go to WikiFX and see different brokers' commissions and swap fees and everything, and do your own calculations and do your own forward testing and see which one works best. For me personally, I use forex. It's quite helpful and profitable. They don't charge too much commission on each trade, and their spreads are okay, so you end up making more money comparing to other places. What was the other thing? Yeah, don't trade during the news times. It's going to be really volatile. Close your trades before the news is, close them. There's going to be one more thing that you should focus on. And if you know what is standard deviation, check that indicator out when it's too high on 1 hour time frame or 30 minutes time frame. Avoid trading in those times and try to use ATR, average true range, that indicator. And on 15-minute time frame or 1 hour time frame, when it's at the lowest, those are the best times to get entries, because those are times when volatility is the lowest. And you can you will have less likely to hit your stop loss, and you will have better risk to reward ratio. Of course, this should be incorporating with your own strategy. If it doesn't, do not use ATR or standard deviation. This is just a general suggestion. What else you can do is that try to avoid using one strategy only. Have 2 strategies at least. One is based on mean reversion and a little bit mix of trend probability. The other is using trend probability only with a little bit mean reversion to buy lows or sell highs in the trend probability strategy. Yeah, try to do that. And what you'll find is that, because many times having one strategy alone isn't very helpful, because after a while that strategy becomes expired or not effective because the market condition changes. And let's say the market has 4 to 5 phases of changing, and once it changes, right, all your previous strategies that have been profitable, they are not going to be profitable anymore for a time at least. Then you will be shifting to your other strategies. After a while, mean reversion strategies might not be useful and market's trending, so you might as well use your trend probability strategies in these times. So have at least like 2 to 3 mean reversion strategies and 2 to 3 trend probability strategies, and try to focus on 1 to 3 pairs of forex pairs only. Don't focus on too many of them, because when you focus on 3 of them only, you will develop an intuition on them, and you will be making better decisions along the way. Also, when you trade these pairs, do not use pairs that are too similar to each other. Like, do not trade GBP USD and then EUR USD and then JPY USD or USD JPY, stuff like that. I mean, you're just trading USD the whole time, it's just slightly different. If USD is having volatile condition, right, all of your strategies won't be working on there. So try something else. try EURUSD maybe, and then NZD CHF, and or try indices like US 30. I personally like to use Bitcoin, gold, and US 30 and EURUSD. Yeah, so I like to use these four because they're very different from each other. And for example, if gold goes bad, money goes to US 30. Like if gold is going sideways, the US stock market is going up. If the stock market is going sideways, the gold is going up normally. If none of them are going up, Bitcoin is going up, or maybe it's EURUSD, and the forex market is moving. So that's how I like to spread it, and you can also use that. So in different conditions, you will be able to make money. Of course, the last thing that you need to know is that, these things that I just told you are advanced stuffs, good tips. The last thing is that you need to be good at practicing. Practice makes perfect, and it's going to take time. And once you put faith in a strategy, don't give up on it for a time being, even if it's not profitable, because you can't be profitable all the time. If you see your strategy being not profitable 3 times a day, not 3 times, 3 times in a row or 5 times in a row, still don't give up on it. You've made that strategy for a reason, right? So you need to believe in it. You need to believe in yourself. So keep trading that strategy, and you will find it being profitable soon. The other thing is that try to limit your trading in a day. Limit to 2 to 3 strategies, 2 to 3 trades a day only, because if you are addicted to trading, you're gonna not make sophisticated decisions. So limit it to 2 to 3 trades a day, or 1 loss a day, because 1 loss a day is like, once you have a loss that day, you're not gonna trade that day anymore. So once you have that, or if you made like 2 wins in a day or 1 loss in a day, if you have these kind of rules, like if you made 2 wins in a day or 1 loss in a day, you're gonna stop trading that day. You're gonna need these kind of rules, because with these kind of rules, you're gonna be able to survive the market, and you're gonna survive what do they call it, over trading. Yeah. So having more of these things around you, you're gonna reduce your trading risk by a lot. Okay. And the other thing is that you can put in 10K into your trading broker, in your forex broker, and trade with that, or you can just put in 1K, but use higher risk, like what do you call that? If you believe in your strategy, of course, then you should do that. Putting in 1K and then risking 5% on each trade, yeah, you can either do that, or you can just go the traditional way of putting all the 10K in there and trading 0.5% risk per trade. The benefit with dividing your money into 10, like from 10K to 1K, and put that in there and risking 5% a trade, is that you're gaining same amount of money, and if you lost your money, it wouldn't be a portion of your personal money. It will be only 10% of your whole portfolio. And the upside is that if the broker is trying to scam you or whatever, right, and something goes south, or the broker crashes or whatever, you won't be risking all your money in one broker. So you get my point. But do that only if your trading strategy is very solid and you're confident in it, and then do that. But I recommend you do that instead of putting all your money into the broker, and risking 5% each trade. you're gonna make a lot of money through that too. But it's just same as if you put 10K in, because this way is much better. I hope you understand that point. I might come up with more de-risking tips in future, but I hope you find this helpful, and please press the like button and subscribe button, and join our Telegram group if you find this helpful and you want to learn more. Let me know in the comments what else do you want me to talk about, and all the best, guys.